Hey there, it's Dave with Triumph Business Solutions, and today we're going to introduce you to the concept of a drip account. So, if you're a service based business, maybe that works on large contracts or large upfront retainers, or maybe you are an individual who is seasonal and you need to make sure that your cash flow fills up your entire year and not just the months when you receive money. Here is an idea and a concept that maybe you can even implement today. So, let's go ahead and jump into it. So what you'll see behind me is an example of a flow that I just built out for a client who's kind of in this same scenario. And in this case, what you'll want to do is look at over 12 months, what is the target cash that you need to have coming into your income account that is then allocated out to your other accounts to operate your business efficiently. And so this is going to include what do you need to pay for taxes, your profit, your owner's pay, your profit distributions, as well as any operating expenses that occur every single month. Once you've determined that target, in this case, they had a target of $17,000 to $20,000 in months when money or cash being inflowed into the business is above the target, then that money would flow to the drip account and be accumulated until it is needed. On months when your income is below the target, then you would take money out of your drip account to cover and bring that income balance or the amount allocated during the month to your target. And so what you'll do is, let's say for an example, you have 1 month that has $30,000 brought in, and you want to keep 20 as your target. So you're going to move 10,000 to your drip account, and then the next month, maybe you only had 15,000 come in. So maybe you're going to take two, right? So at least a balance of $8,000 in your drip account. Now the next month, maybe you again only brought in 13. So now in order to get to your minimum allocation, you need to grab another four. So you see how this works. It helps you keep your cash stable in your business by having this simple drip account set up in your organization to, instead of spending all the money when you get it on those large months and not having it in the shortfall months. And then just like every other month or every other allocation, you'll take whatever money comes into your income account for that month, and then you can split it up over your allocated profit first allocations uh, into its each purpose. So profit would be first, which would be accumulating until you have your quarterly profit distribution. Second would be your owner's pay, which is for your monthly payroll or your lifestyle draws. Then you have your tax account. We all know the tax man wants wants his money. And then finally, whatever's left, that's what you're running your business on. That's your operating expenses. And obviously, if you're not running profit first now, I don't expect you to be perfect at this. But if you have questions, drop them down below. I can answer them for you, and I can even help possibly set one of these flows up for you in your business. So if you want to talk about it, maybe you're like, man, this is a great idea. I just don't know how to get started. I don't know what my allocation should be. I don't know what my target should be. Let's have a conversation and let's figure it out for you so that as you head into 2026, you can set things up right. So hope you have a great one. I hope this kind of gave you a good idea of what a drip account can do and how it can help you level out your cash flow in your business. Until then, I'll see everybody in the next one.